Okay. Hey, everybody. Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at home builders today, as nobody else seems to be. In a really crappy environment like this, you wouldn't expect the home construction industry to do very well. Though I'll tell you one thing, as horrible as it might ever do, it's doing a hell of a lot better than the office space. If you're in like a commercial REIT, whew, God help you. But with respect to the home builders, the thing that's really interesting, and by the way, the XHB, it's got a lot of stuff in it other than home building stocks. We'll look at a few in a second. But when you think about it, if the Fed is about done raising rates, here's the 10-year. It's not what the Fed, this is actually has a lot more control over the Fed than the Fed has over this, except when it's really flexing its muscles, then it just becomes a dumb weightlifter. I'm talking about the Fed, not really knowing what it's doing. But here, with the treasuries down like this, the yield starting to come down, you look at something like the home builders and say, well, shoot, man, they should have been down a whole lot worse than they were. And this is Lennar back in January. Kramer, I'd actually been sending home builders to Jim for a while, for back in November, I think I started, maybe it was December, and saying like, dude, I don't know why, but you got to be looking at the home builders because they're actually kind of worked. Crickets. Didn't even get a reply. Nothing. And then back in January, he asked me if I liked something, would I want to put something on the show? And I'm still going like, dude, home builders, see previous email. Thanks in advance. And so I put on Lennar here at 95.29 for him. We were in early at a few bucks lower, but put it on for him here. And after all this time, we're still up. The worst that had happened was we were down just a little bit, not very much to speak of. But now this is still even profitable despite just the absolute filleting that the market has taken with the Fed's actions. And so I was looking at home builders, and I see that these things are bouncing right off of the 50-day moving average, and I like the action here. So my suggestion is that you watch this. This could be worth a trade right here. And my suggestion would be that you just keep a tight stop on it. You keep a leash on it that doesn't allow it to go farther than Wednesday's intraday low of 63.79. So maybe you put your stop at 63.70 or something like that. That's a really, really tight stop. But I looked at all the different holdings within this, and I came up with two that look pretty good. And that's Carrier Global. It had 4 down days in a row, big reversal day here on Tuesday, and then the rest of the week really, really sucked. But now it's holding the 50. I wouldn't be buying this tomorrow, but you definitely want to hold it. It's got some pain that it has to work through on this, but hey, man, it's March, towards the end of March, summer's coming on. Guess what this company does? Okay, and then the other one is MDC Holdings. This is kind of a smaller semi-regional builder. They're holding up really, really nicely. You can see that it's kind of made the turn here. So look for this kind of move, and you want to keep your stop just a little bit below the 50-day moving average. Anyway, that's the way I'd trade it. Stay tuned for coming attractions in the next few weeks. I have a major announcement that you're definitely going to want to hear, but I'm not going to tell you what it is in advance because otherwise I would be making that announcement, and that's not the way I roll. So I'll see you next time.